everybody is looking for the laziest way to get rich, whether it's drop shipping, day trading, business coaching, the list goes on. It's all nonsense, guys. So I'm going to break this down into 8 steps that you can follow to make money as easily and lazily, dare I say it, as possible. Step 1 is to get a better job. That is the easiest way and arguably the fastest way to earn more and take a step towards becoming rich. What you do with that money can be multiplied exponentially. You can invest that money passively, which sure is lazy as fuck, or you could invest the money in single stocks and potentially earn 50% more by the time you retire. But that for most people is going to be the opposite of lazy. It's probably going to sound like hard work. We'll go through that in more detail a little bit later on. So, step 2, avoid looking at charts. This might come as a surprise to you, but technical analysis is bullshit. I spent the early part of my career trying to develop technically driven, so charting-based signals, and program those into a system, a robot that could do it for me. Again, I told you we're all programmed to try and make money in the laziest way possible. And what I found, despite my endeavor, was that it was ultimately a fool's errand. There were occasions that I thought I'd made a breakthrough. I even got offered a job at a hedge fund on the basis of one of the systems that I'd developed, when in reality, I just hadn't tested it thoroughly enough for it to eventually be exposed as being ineffective, having hindsight bias in it, and all of these really embarrassing things that as a 21, 22-year-old, as a grad, I just didn't have the experience to realize. Similarly, day trading on that basis is fucking exhausting. The majority of my friends who were on trading desks a little bit earlier in the career than I was, most of them were burned out and unfortunately on antidepressants and things by the time they were about 27. And they didn't necessarily recover the careers from there. Those that remained in the industry were ultimately burned out, washed up, and sure, they made a lot of money in the process, but I promise you, it saps everything from you, your entire bloody soul, never mind your energy and your human being. Takes your soul. So that also isn't the answer. Now, my next tip is to stop looking at crypto. All of the stress that comes with seeing your portfolio down massively, and then the euphoria of seeing it recover, usually temporarily, before then getting head faked into making a bad decision, it's exhausting. I don't regard it as something that you can do lazily. For me, as somebody who's now made money and has relative freedom, the real asset beyond time is really my chi, if that's the right term. It's my energy. We're in the attention economy. And I would say that beyond the units, the finite units of time that we have in a day, it's the same for every human being on the planet. It's really our focus that social media platforms, videos like this are all competing for. And chasing crypto and being caught up in that echo chamber is exhausting. So it's certainly not a lazy way of making money. Which brings me to my 4th point. You need to focus on a longer term investing horizon. You don't want to be worrying about 1-minute charts and even daily charts. It's just nonsense. You want to set and forget. And in my case, I don't even look at charts. I don't look at charts in the build-up to deciding whether or not to purchase a company. And thereafter, I never check my portfolio. Maybe once a month I'll check in on the value, just out of curiosity. But because it's invested for the long term, multiple decades, I'm not having to compete with the rest of the market, who's becoming increasingly short-termist, as we can see throughout our culture. Everybody is trying to get rich overnight. And now this next wave is getting rich overnight with zero effort. It's just madness. And you can see it in this chart, which I've featured in a bunch of my other videos as well, which shows how there's no real excess return or outperformance available in the very short term. It's been competed away. And that means that where nobody is now looking out in the long term, the returns are there for the taking. Now, this is where we begin to warm up a bit more to a lazy approach. So step 5 is to stop trying to predict the future. This is incredibly complex and therefore incredibly exhausting. For points in my career, I was a global macro investor, which basically means that rather than looking at a company's fundamentals to work out whether or not you wanted to buy the stock, I was trying to piece together a constantly moving puzzle of what was going on all over the world at once, to then work out what themes were unfolding, what the dominant drivers were currently, and work that through to particular regions, sectors, and then stocks, to then end up doing the same thing and buying a particular stock. The best global macro commentators made for some of the worst investors that I knew. Trying to predict the future is not a lazy or easy way of making money. What you want to do is to find a repeatable, quantifiable edge. And by that, I personally look at fundamentals. And the reason for this is twofold. First of all, fundamentals don't change as often as the price. You need at least 6 months to have 2 data sets. But realistically, we're going to be looking at 12 to 18 months before you can form a pattern as to whether there's been an inflection in the company's prospects. And especially for so-called quality profile companies, they've been around for usually decades. A big oil tanker doesn't turn on a dime. So if you take this approach, you found the fundamental edge and you give it to GPT, which is exactly what I've done, it can do the legwork for us. And that's how I've made this process even lazier. But I don't want to turn this into a sales pitch, so I'm not going to labor the point. Let's keep things rolling. So once you've done that, you'll have a bunch of stocks that you're looking to invest in. You don't want to diversify. When you're investing in quality companies like I do, you can only expect to outperform the market if you have a relatively concentrated, small portfolio. So by that, we're talking about maybe 20, possibly even close to 10 positions. In my portfolio currently, I hold 17 companies. There's not hundreds of things going on and hundreds of things potentially changing. And this brings me on to the final point as the laziest way to make money that I know of. And that's to do nothing. Every company that I invest in, I do so with a minimum investment horizon per stock of 2 or more years. At portfolio level, as I've discussed, I'm investing much longer term than that, all the way through to retirement, maybe beyond. Now, the other anecdote around this is that Fidelity did a study many years ago now, and what they found is that the best performing accounts were those that hadn't logged in for the longest amount of time. Whether that was because they'd lost the login details or, in many cases, they'd passed away. So to conclude everything that we've discussed here, the laziest way to make money is to buy quality companies and do nothing. If you enjoyed this video but you're feeling too lazy to leave the couch, then check out this one, which I think you're also going to love.